Hey traders, this is Ahmed Jaffrey and you're watching my Forex Tips YouTube channel. Today I'm here with a very excellent strategy in the Forex trading system. Through this strategy, you can win around 75 to 100 pips daily. This strategy has got a main features that is concerning with the three market sessions. The first one is the Asian session. Second one is the Euro and UK session, and the third one is the US session. In the market, in the Asian session, we have the least liquidity in the market that can drive the market, and the price normally remains in a range of about 25 to 40 pips. In Euro session and UK session, which is almost the same, in this session there is maximum volatility present in the market, that's around more than 60%, and the market moves a lot in this session. Next volatile session is US session, which is more volatile than the Asian one, but less volatile as compared to the Euro session. So first of all, I will let you know about the timings of the different market sessions and how the market behaves in different timings. First, towards the Asian session. In Asian session, the timing of the market is important. That is 8 to 11 p.m. Eastern time. And next is the Euro/UK session. The timing of the market is 2 to 5 a.m. Eastern time. And the US session starts at 8 to 11 a.m. Eastern time. Now, the session itself may be around 8 hours, but we will focus only on these particular timings because these are the timing in which the market makes a box and low and high in that particular 3 hours time. So in every session, these 3 hours are important. In Asian session, 8 to 11 Eastern time. In Euro session, 2 to 5 a.m. Eastern time. And US session, 8 to 11 a.m. Eastern time. So these are the very important timings. But in order to adopt this strategy, it is very important that market has to be trending. That means the market is either in a buy or in a sell. And how you can check that the market is in a trending? If the market is creating a higher high and a lower high, higher highs and higher lows. So that means the market is bullish and it is in a buy trend. If the market is making a lower high and lower lows, that means the market is bearish and it is trending downward. So this strategy will be adopted only if the market is in either a buy trend or a sell trend. So before I explain about this market trending system, first of all I will let you know about how the market cycle works. Suppose when the market makes a move, then it's consolidate for a certain period of time. That means it will remain in a range. So this stage is called consolidation stage. Consolidation stage. Now after this, when the market has to move in any particular direction, so it can move in different way. Either it's going to break the low of this session to take out the stop losses of all those traders who are buying from this setup. And then the market moves up. So this one is stop hunt, and then the market moves in one particular direction. So this move is a consolidation one, This one is an expansion phase, expansion stage. The market is going to expand from this range boundaries, and after that then the market adopt a trend in one direction, then it's move like this and moves upward or downward, whatever the case may be. So we have to know what are the basic market cycles, and we have to find that in which market cycle the market is right now. And after this market cycles appears in all time frames, from right 1 minute time frame to 1 hour, 1 day, 1 week, 4 hourly and monthly charts. So this market cycles stays there in all cases. So we have to find out that in which setup is the market right now, whether it's in a consolidation stage or expansion stage, or it's an impulsive move stage. This one's an impulsive move stage or trending stage. So after every consolidation there is an expansion. After every expansion there is the market is trending for quite some time. So before we start with this strategy, we have to know what are the market cycles. So these are the 3 market cycles. Market cycles. So we have to know that what are the important market cycles, and we have to identify the pattern what the market is doing right now. And this is important, how the banks they're gonna trade in the market, because the big institution or the smart money or the banks, the liquidity is around in this region, either above the range of the consolidation or below the range of this. So liquidity is here. So what the smart money is doing, that they bring the market either to the up, breaks the top, or breaks the low, and then it's resume its direction in which it's supposed to go. So the liquidity is around either above this consolidation or below this consolidation stage. Now we'll take the example of a market which is trending and which is going in the bullish, like in a buy. So we will use 15 minutes candles pattern, 15-minute time frame for this strategy. Suppose this is the start of the day and the market behaves like this. It moves up, and then these are the important timings, 8 to 11 Eastern time. Now then the market is going to expand, make a push like this and start consolidating and make the low of the day if the market is trending. So this would be low of the day, and after it has set the low of the day, then the market pushes the low of the day and then resume in the upward direction in the Euro session. Now the important thing is we have to consider only 12 candles in the Asian session. Now here is a box which contains 12 candles of the 3 hours, that is 8 to 11 Eastern time, 11 p.m. Eastern time. So these are the candle pattern in which the market is consolidating between 2 highs. Now in this case, if the market is trending upward, then this is the region in which you can place buy order, not from the low of this consolidation stage, but about 10, 12, 15 pips below this consolidation range, you can place a buy order with TP 50 to 75 pips. Because this strategy works for the main pairs GBP USD, Euro USD, GBP CHF, GBP Aussie. So in pound and euro pairs, you can apply this strategy. Now, when the 11 p.m. Eastern time, the moment this is 11:15 p.m. candle start, I mean the next hour candle, so this candle is going to move exactly in opposite direction to the true move of the market. So it's gonna push downward and then resume its direction to the upward, hence forming a low of the day over here at this point, low of the day. So from this point onward, you can put a buy trade, but we have to see that what should be the pattern that it is forming in this box. According to that pattern, we can put the buy order from this point. So let me explain you the candle pattern which it can form in this box, which is in the Asian session. Suppose the market has gone up this point and then it make a pattern like this, then this would have been the pattern. This is the box and it has broken the low of this Asian session and the market is resuming upward. If it forms a W shape, whether W in this form, W in this form, or extended W in this form, so in all cases the low of the market, so from there onward you can place the buy trade. Now what could have been the possible candle pattern in this box? Say this is the Asian box. It forms one 15 minutes candle, other one like this, then if it forms a hammer pattern over here, so this hammer pattern confirms that the market has made its low. Now the market is pushing in the upward direction. In that case, market may come down once again to this level. So, but later on, market will make move like this in 3 pushes, or maybe it can make an impulsive move to break the high of this and go to the next box, which is in the euro session. So if the market forms this pattern, so this shows that you can place a buy trade below this and the market is going to move up. So confirmation candle would be an hammer which is just touching the low of this session, and then the market will resume in the upward direction. So this is one of the candlestick pattern that confirms that you can place a buy order from here. In this box, it can move like this. The market comes down with 3 impulses like this, and then start moving up in this manner. So if it make a V pattern, so this also confirms that if market start, it's make a very engulfing candle over here, which is breaking the high of the previous candle. Suppose this is the high of the previous candle. So if it is an engulfing candle, so this confirms that the market is buy from this point. I hope that I'm clear about this. Now then comes, so this I have talked about the consolidation stage, and after that there's a liquidity hours of the market comes, that is after the ascent session. Liquidity hours. Liquidity hours start just after this, around 12 p.m. EST. So in the liquidity hours, the market makes a big move and almost double the range of the Asian session. If the Asian session range is around 25 to 40 pips, then the market may move in the next Euro session from 50 to 80 pips. So in liquidity hours, the 12 p.m. and 1 a.m. 1 a.m. in EST. So these 2 hours are very important, and the market set its direction in these 2 particular hours, and it breaks the high of the Asian session and move in the upward direction for the high of the day. Now in case the market has broken the Asian session and moved up and start making, again it's formed a box that is consisting of 12 candles. Again the timing would be 2 to 5 a.m. Eastern time. So market makes a push, and from next 2 to 5 Eastern time, it is going to make the another 12 candle patterns to setting of the high of the day. Now in this case, this is also a consolidation stage. After this move, market again, if it has to move high of the, breaking the high of this day, then it has to make a move lower, and then it can move a bit higher before the US session starts. So in this case, you can again place a buy order just 10 to 12 pips below the Euro session, and safely you can place order 15 pips below the Euro session, and you can safely place the stop loss of 20 pips, and TP safely you can set 1:3R. Risk to reward ratio has to be 3, so TP should be 60 pips minimum. So in this case, you can catch the longest move of the day and you can get out of the trade. So this strategy is used in the buy market, the bullish market. The same you can use in the selling market. In selling, you can place the sell from the above of the Asian session as well as from the above of the Euro session for the low of the day. So in bullish market, the market is going to make a high, then it makes a low of the day, then enter into the Euro session, and after that it can further move in the US session onward. So the same strategy you can use in the US session. If the market is already set a high of the day, then you can in counter trend you can take a small sell, but I will not recommend. If the market is bullish, always take the buy trade, don't take the sell trade. So for this strategy, you can use the 6 pairs: GBP USD, GBP JPY, Euro USD, Euro GBP, GBP Swiss franc. In these pairs, you can choose 2 good pairs which is forming the setup for the buy. If our market is already in a bullish trend, then you can check out if the market is forming a V shape in the Asian session, then you can take a buy trade from here. If there is a strong engulfing bullish candle appears near the low of the Asian session, then you can place the buy trade, and in this manner you can catch the low of the day and you can fetch a lot of pips from this trade if you hold it for till US session. So likewise, if the market is selling in the selling market is come down, then make a high of the day. This is the Euro session, and above the Euro session here is the liquidity, and you can place the sell order from above the Asian session, and then the market moves downward in the Euro session. And likewise, in the same way, when the market makes a consolidation in the Euro session, then the high of this Euro session will be a good selling opportunity for another low of the day in the US session. So in this manner, as the normal volatility of the GBP USD is 128 pips a day, so you can easily take around 75 to 80 pips a day with only stop loss of 20 pips. For further safety, you can place stop loss of 25 pips, but even 15 pips is enough, because if you catch the low of the day, after that the market is very rare that it's gonna hit the stop loss of this session, so you can gain about 1:4. So your risk to reward ratio is 1:4. But take only 2 pairs. Don't trade in all pairs. The trade will give you a very strong setup for buy or a sell, so you can take the trade in this particular, just considering the particular setup, and you can catch the low of the day or the high of the day. So in this manner you can really catch the longest trade of the day. So you don't have to be sitting all the time in front of the platform and just confusing yourself and taking a pain. So just take the trade and leave it till the US session, and hopefully you will get 75 to 80 pips on a normal average day. Thank you very much. If you like my videos, so please like.